Hi, this is Brien Lundin, and I am at the Metals Investor Forum in beautiful, not so sunny Toronto, right ahead of the PDAC. And I have the great pleasure of interviewing Kimberly Ann, founder, president, CEO, chief bottle washer for
and director
for Lahontan Gold. Lahontan is a new recommendation in Gold newsletter. And something that I could not resist after we've been talking about the company for about a year or so, and then talking about an upcoming maiden resource estimate on your property in Nevada, very extensive district scale property in Nevada. And to my amazement, the resource estimate came out, and it was in a down market, and you had an incredible resource of combined indicated and inferred of 1.7 million ounces, over a gram per ton in Nevada, open pittable, over 1 million ounces of it oxide, and a market cap of around 10 or 11 million dollars Canadian.
That's correct.
That's pretty irresistible as an opportunity in my mind. Kimberly, just give us a brief history of how the company came to be. It is a new company, not a big following yet. We're working to solve that through Gold Newsletter, get that story out. But give us a brief history of your brief history with Lahontan Gold.
Thank you, Brien, for having me. So Lahontan Gold, we formed this company September 2020, and we vended in 2 assets from my private company and 1 from Victoria Gold.
Yeah.
We just felt like our teams align with our outlook on properties, and in Nevada especially, we thought we could really make a fantastic company together. So we put a $10 million valuation around the company. 80% of the ownership went to Victoria Gold and their shareholders, and then 20% went to my private company with my partner. And the reason for that out of balance number is because Victoria's asset that they brought in was Santa Fe. It was a past producer. A lot of money has been spent. The other 2 are fantastic assets, but more of a greenfield type scenario.
Mm-hmm.
We went out and raised funds. This is all during the pandemic. We're lucky enough to have a team with drone trucks and turnkey style operations. So they just went to work, no problems during the whole COVID timeline. And we went out and we mapped and sampled and drilled. We've drilled 14,000 meters to date. We took all the historic data from the project that had been in the database, took it to a third party before we start our drill program to just kind of see where we were as a company. Where do we start? I'm really a CEO that does not like to waste dollars, meaning I don't want to drill just for fun and pretty holes. I want to add ounces as quick as possible. Mm-hmm. And the goal that we told everybody a year and a half ago was we're going to come out with the resource plus 1.5 million ounces, plus a gram gold, very good grades, especially with the prices we have in metal prices.
Which frankly sounds like a pretty high goal.
Yes.
So I'm not sure how many people took you seriously at that point.
A lot of people
a lot of people maybe didn't. Huh?
But I don't like to be wrong, and I like to be accountable for what we tell our people. I promised it would happen in January, and it came out January 17th. We just filed the full report this morning, and it was 1.7 million ounces, and it was 1.12 grams gold EQ. So, it's a great starting point. Mm-hmm. However, we've got a big year ahead of us. We're going to be starting our drill rig May 1st. We are focused on using an RC rig because it's low cost. We can drill for $90 all in a meter. We have done core drilling as well, but the numbers match up so well that our technical third party said don't waste money that way.
Yeah, you don't really need as much structural information in this because you're going from open pittable deposits, and you have previous drilling in a lot of these areas that are guiding you, and you have other anomalies, geochemical anomalies, et cetera. So, I would say RC is the way to go. So you're going to get a lot of meters done.
We're going to get a lot of meters. And our slab Calvada area, which was where we have smaller pits, because it was mined at the end of the life during 1991-92 era. But that area alone, we have drilled down to 270 meters and have been in all oxide, which is extremely exciting for our team. So we don't know where the transition is.
Right.
And, I've encouraged the team to drill a little bit of a deeper hole, but we can just gobble up ounces quickly and not, and a great low cost. So our resource to date, we did a pit constrained resource. I wanted the highest quality report we could put out, mostly for our internal numbers. It doesn't do any good if you smear the numbers across. So it was pit constrained, but we have a lot of blocks outside of the model we put together and published.
And they're outside because you just don't have sufficient drill density,
that's
right?
correct.
Okay.
So that is definitely step one of the drill program. Let's add those ounces. Let's put some holes in between them so we can add them. So it's a really exciting time for the company. We are doing some bottle roll tests right now. I mean, we have stacks and stacks of network that's been done from the mining operation, but we want updated numbers. So we're continuing to do that in parallel with our drill program.
So really, you're going to be expanding the resource with this drill program. You already have a great resource, so expansion coming ahead. A lot of that, I guess, at Santa Fe, but you also have these other areas where you have some previous drilling, but none of that is in the resource currently.
That's correct. And that's because we have a significant amount of sulfides underneath our Santa Fe pit in particular, very high grade stuff. And it's not something to discount to the market. It's just people understand oxides, they're low hanging fruit that we can mine and at low cost and process. So
which highlights another aspect. You're in Nevada, of all places, where projects typically carry a premium, and you're trading now at a discount to, I mean, if the project was in Timbuktu, you would be at a discount to valuation there. That's what really attracted me to the play. You're in a premier district. Resources there should command a premium. You also have a low hurdle in Nevada, whereas it may be a gram per ton for a open pit somewhere else. It's closer to half a gram per ton in Nevada with all of the infrastructure in the area. But you have a really rich grade for an open pit. You're a value play in that the company should, by all metrics, be valued, I believe, at a multiple of where you are now. But it's also an exploration play. It's also a development play in a growth story because you can add so many ounces.
Absolutely. There's massive blue sky to this operation. And then you add on that it was a past producer, which means we're still a mine under closure.
Good point.
We have fantastic road access. We have 2 wells on the property. We have a substation on the property. We have infrastructure galore, and we have made it very clear to the BLM, we want to fast track this back into production. What studies do we need to do in parallel once we get to the next hurdle of once this drill program's over? Like, are we ready to be going down that path, or do we want to drill some more? We're flexible in that way.
Yeah, and a junior exploration developer like you would want to take a buyout offer, and that's typically the path to a quick return for shareholders if a company comes in to buy it. But unlike a lot of other companies in your position or in the exploration end of it, they don't have the skill set to bring it into production, and big companies know that.
That's true.
But you actually, through Victoria's big holding and their ability to bring a mine on stream in the Yukon at the bottom of a market against all odds, you have a very credible backstop, and you can very credibly be the other natural bidder for this project when any company,
which is extremely unusual in the junior space. Myself and Brian Marr, who's the VP of Exploration, we've put mines in production in Peru, high-grade gold and silver underground. So we all on the team, we have a great balance of how to go down that path. That being said, I always work with my shareholders, and I will always focus on what makes my shareholders the most money. I have this rule that I never fall in love with an asset because I'm not a geologist. I'm a business person, and I will do the right move for my team and for the shareholders.
Well, it looks like we're going to have a lot of moves up ahead. The market is just beginning to realize what a value this is. We're helping to get the story out, and I think with that drill program coming up, a lot more news coming down the line, expanding the resources. Kimberly, thank you for bringing the story to us today. I am very happy to be a shareholder myself, very happy to have the company in my gold newsletter portfolio, and looking forward to great things to come.
Thank you so much.